Hey everybody, it's Mike over at Taxes and Bricks. Well, happy holiday Monday. Hope you're not working today. I am, because it's tax season. And welcome to episode 31. Before I get into the topic of conversation for episode 31, which is withholding, I wanted to kind of say I recorded and edited this video over the weekend. And was relatively happy with it, but then I woke up this morning and just threw it out, and I was excited to get in here because I threw it out because I think that this topic of conversation is way too broad to just toss out there in a 10 or 15 minute video. And so I've decided I want to split it up a little bit, kind of like we did the filing status series, and just do it over the course of a couple of episodes, because I think it's important for us to spend some time defining some terms that we're going to use throughout this. I think that there's a concept of federal tax withholding and then state/local tax withholding, and I really want to delve into some details there. So I'm going to split this up a little bit. So I'm excited to get started on this because I think this is an important topic of conversation. I think it's something that affects everybody, or at least everyone who files a tax return anyway. So we're going to do some definitions. We're going to talk a little bit about why this is an important topic and why I've decided to throw out some information about this, the things that I've seen. But first, if you like this kind of content, go ahead and hit that like button below. Definitely leave a comment. I read them and respond to all of them. And also, if you haven't already, subscribe. It's totally free. Share our content with your friends. Because second announcement, we are going to be cutting back the videos just a little bit. Instead of 5 a week, I'll probably go to 3 or 2 through the rest of February into March and April, just because it's tax season and I need to marshal my efforts and time here. And as much as I would love to just do these videos and not do any tax returns, the reality is got to do some tax returns. So we are going to be back a little later this week, maybe Wednesday, with the next step in the architecture series. So stay tuned for that. We will do a little bit of a mailbag, and I might continue the withholding on Friday. So yeah, like, comment, subscribe. Now, since this is tax related today, gonna pay the lawyers, so hang on just a second while I throw up a disclaimer, and we'll be right back.
This video is rated TAX and contains occasional ramblings, mild attempts at humor, self-deprecation, irreverence, brief numerical examples, and adult tax and accounting advice that may not be suitable for all taxpayers. Viewer discretion is advised. Before following any of the advice in this or any of our videos, you should always consult with a tax professional. Thank you.
All right, so why are we talking today about withholding? Well, I think the withholding system, the sort of, the techniques and the formatting that everybody is sort of placed underneath is broken, and it always has been. It's a one-size-fits-all system for every person that files a return. And so it might work for some, but it's not going to work for anybody. And I don't think that there's any system out there that, could be designed as one size fits all for everybody that's going to work. So this is sort of all sparked by the fact that over the last couple of years, doing this 21 years now or whatever, this has been a problem. When anybody owes and they don't know why, it's probably because they didn't have enough withholding taken out. So it's always been a bit of a problem, but I think it became a bigger problem relatively recently, and we're going to get into why and when that was. But I think it's important to understand we're going to break this topic down, I think, into 3 main sections. So today we're going to talk about definitions of some terms that we're going to use throughout this series. And then we're going to talk a little bit about, again, some examples of why and what's going on with all of this and when this all kind of became a bit more widespread of a problem. I think in the next episode, we're going to talk about federal withholding almost specifically or exclusively, and how I believe people should fix problems they have with under withholding or over withholding. And then I think in the third and final section of this part or this series, we're going to talk a little bit about states, because states are a problem too, and not for the same reason the federal is a problem. Okay, so again, like I said, I think this has always been an issue. I've been doing this a long time. I've always seen withholding as a problem. In the past, I used to hear things like, well, but I'm claiming married 0. Why do I owe? I'm claiming single 1. Why do I owe? Well, those numbers and that filing status that you claimed, you probably didn't really fully understand what the heck that meant. You thought that if maybe you are actually married, okay, and so it's just you and your spouse and you have no dependents, married 0 is going to work, because they're asking you, what's your filing status and how many dependents do you have? This was in the past, of course, prior to 2018. And I don't understand why I owe. Or I'm single and I have a child. I claim single 1. Why do I owe? Well, it was never that simple. Maybe if you just had a W-2 and you just made a standard income and it never really changed, and you had nothing else going on in your tax return except for that one dependent, and you were single and you didn't really make a lot of money, okay, maybe it worked for you. In fact, it probably did, okay? Maybe you had a lot of deductions and you didn't make a lot of money, so it worked and you were always getting refunds. But if you were, say, married and you had a couple of kids and you had a house, but you also had investments, you were drawing on retirement, or maybe you had a small business or a rental property or anything that could have caused capital gains, whatever you claimed in terms of withholding probably wasn't going to work, okay? It got worse in 2018. Why 2018? Well, the end of 2017, they passed something called the Tax Cuts and Jobs Act, and this was a relatively temporary measure that did indeed reduce income tax rates for most people and most income tax brackets. But it went ahead and it issued directives and alterations to the withholding schedules that said withhold less from everybody so that everybody could feel the positive impacts of lower taxes. But they're withholding far less than they actually dropped the tax rates. So maybe they dropped the tax rates on somebody 2 or 3%, and then they dumped the withholding 7, 8, 9, 10%. And all of a sudden, somebody who was maybe getting a refund definitely was paying a little bit less in taxes, but had a ton less in withholding, and all of a sudden owes a bunch of money, and then like emotionally or mentally you feel like, well, I owe, therefore my taxes went up. No, that's not how it works. So I think to understand a bit of this as we kind of delve into this and whatever, I think today we're going to spend some time defining some terms. I'm going to clear up a couple of things. I'm going to tell you about a few terms that just don't matter anymore. They don't exist. And so I think maybe as a society, we should just stop saying them. Okay? Well, I mean, you can say whatever you want. It's a free country. But I think, at least in terms of me and my conversations, I will tell people, listen, XYZ doesn't matter anymore. This is not how we do it. And then I'll introduce a little bit further in terms of the topic, some examples of what I see, and then we'll wrap up from there. Okay, so withholding, what is it? Great. Withholding is an amount of money that your employer, mainly your employer, but sometimes banks or financial institutions or the company that manages your retirement account or maybe even Social Security Administration, it's the amount of money they take when they pay you, either your wages, your salary, a pension distribution, or whatever. They hold on to it. They withhold it. I hate to define using the word, but they take it back and they hold it. And then they remit it to the IRS, Social Security, Medicare, state, whatever, okay? Withholding. That's what it means, okay? That's why when you get paid your $3,000 paycheck every week, you don't get $3,000. You get $1,874.22. Why? Because they took a bunch of money back and they held it, and then they send it on your behalf, okay? Most common, you're a W-2 employee, you get taxes withheld. Okay, that's withholding. All right. What's a tax return? Okay, a tax return is not money. A tax return is this: your 1040 or your state return. It's a piece of paper, or many pieces of paper in many people's cases. It's a report listing all of your income, deductions, credits, etc., etc., etc. Tax return, money is your refund, okay? So I think if we use those terms interchangeably, no good. Better that we say a return is the report, the piece of paper or a PDF or whatever. The refund's actually the money you get back. Well, how do you get a refund? Well, refund's very simple. Sit down, Do your taxes? Turns out that your job withheld more money than your return says your tax was supposed to be. The IRS or your state's going to give you back the difference. You withheld $1,000. You were only supposed to have paid them throughout the year $800. You're going to get $200 back. That's your refund. Okay. Tax liability. What is that? Well, I hear this all the time. Oh man, my tax liability was like $1,500. I've never owed that much money before in my life. Man, it was crazy. I had to write a check for $1,500. Nuancy, but no. Your tax liability was actually probably a lot more than the $1,500 you ended up sending to the government. That $1,500 was your balance due. Okay? Your tax liability is the amount of money the government agency says your income caused in tax. Then we look at your withholding, and if, let's say, your tax liability was 10 grand and you only withheld from your job $8,000, your balance due is 2 grand. 10 grand was your liability, 8,000 was the withholding, 2 grand. Great. So, withholding, return, refund, liability, balance due. Okay. What's single 1? What's married 3? What's head of household 2? What's married 11? Nothing. Meaningless. So we're not going to say those here, except to reference maybe old-timey tax withholding issues. Why? 2017 again, Tax Cuts and Jobs Act got rid of the personal exemption for dependents on the tax return. Sure, there are tax credits for kids and maybe a little bit for like if you have like a grandmother living with you and she's a dependent, but the number of dependents don't matter anymore. So when somebody comes to me now and says, well, I looked at my W-4 from a bunch of years ago, which I've never refilled out since the Tax Cuts and Jobs Act came up, and I'm at married 0, and I still owe money, I don't understand because I never did before. Well, that's because married 0 is meaningless now. The withholding tables changed, and this person, didn't change their withholding on their W-4, okay? So yeah, we saw this kind of always. It became, I think, more widespread in 2018 and 2019 with the full effect of the Tax Cuts and Jobs Act. But again, it's important to know the system was always broken. It's a one-size-fits-all system, and that never works. That never works across the board for everybody, especially with tax policy, okay? So, maybe this sounds familiar. Maybe you're in this position. Maybe you used to get refunds, the good old days. 14, 15, 16, even 2017, you're like, man, I'm rolling in it. I'm getting refunds. My withholding's great. All of a sudden, 2018 and 2019 comes around and you're like, what the heck? I owe $3,000, okay? And whatnot. And you might be under the mistaken assumption that your taxes went up. Probably wasn't the case. Your taxes actually probably went down a little bit, okay, comparatively. Your rates probably went down a little bit. Maybe you made more money and you paid more in taxes dollar-wise, but you were probably maybe 2, 3, 4%. If you look at, your 2016 and 17 returns compared to 18 and 19, you'll see that your effective tax rate was probably actually lower. I mean, unless you made a ton more money. But if things were pretty consistent over those 4 years, you probably ended up with a slightly lower tax rate, okay? But you owe now, okay? Maybe you always owed, and you're just thinking, God, I can't get a handle on this. I can't wrap my head around it, okay? All of these things are fixable, okay? There are a couple of steps, and there's a few things that I recommend to my clients. We're going to get into those in the next episode. We're going to get into talking a little bit about estimated payments, what a W-4 form is and how to adjust it. We're going to talk a little bit about little tweaks you can make, and then realistically, we're going to talk about not just sort of totally reinventing the wheel here, okay? Just looking at things in easy ways that you can kind of fix all of this. Next episode, okay? So today was more of an introduction into withholding. I hope you enjoyed it. Thanks for watching episode 31. Like, subscribe, comment down below. And then don't forget to tune in. I think Wednesday we're going to continue on Lego Day, architecture. And thanks for watching. Have a great holiday Monday, and we'll talk to you soon.